Hello everyone. So yeah, this is the first video content that I'm creating for my channel called Try Again. So for those watching my contents, so thank you for watching it with your time. So my purpose of these contents is pretty simple. I've been struggling in trading, like break-even profit, loan account, like usually typically all the traders, the way they're learning. So I spent a long time searching the holy grails. So I think I'm tired. So I'm trying to concentrate my thought, and then finally I realized that it's actually the problem is me. So all is just about my thought and understanding about the market, like why not to be greedy, well, how to avoid greedy, how to avoid FOMO, and then maintain consistency in my risk management, in my profit, and then trade management and everything. So my plan is that, because that if you're already following some of the ICTs, that means Michael's contents about strategies and then models and then different components, or basically the source code of the market, the way it delivers the price, right? So if you're struggling to understand, don't worry. So we all struggle, like myself. I struggle a lot. I spent a couple of months, almost like 6 months, and then after 6 months, all those concepts, including liquidity sweep, and then what do you call fair value gap, order block, different PDs, premium and discount, and those things. So it will make sense to you as well if you stick it on it. I mean, definitely it will not gonna work in 1 day or 2 day. The reason is that those want to make it rush, right? So it's because it's not an indicator. So it's the way that how the price or candlestick are painted. So because indicators are a number, like for example moving average or RSI, whatever, is a number you can easily quantify it, right? But here, when you see, it's just like a painting of the chart, or of the candlestick, the price painting basically. So let's put it like price painting. So painting of the chart. So how do you kind of, I mean, you cannot quantify. So this is why it is a little bit difficult to understand the ICT concept. But once you learn all the basic concept, and then learn means that you just watching the video will definitely never gonna work. So you need to come back, why the water block is working, what is the fair value gap, and then how the fair value gap is working, and different models, including price breach, liquidity purge, or market maker, or different model, that why you need to see that in person. Like, you come back to your chart, whatever the asset class that you like it. So you come back to the chart and then see, then you keep seeing, keep watching, and then try and then understand in different time zone, including kill zones, London, Asian, or even New York. Then sometimes, if not like now, and the next time, you will make much more sense. So what today I'm gonna talk, this is just for my own learning. So basically, low resistance liquidity and high resistance liquidity. In fact, for these two concept of liquidity, so even when I was very beginning of the chart, like learning about very very basic things, I was not really fully submitted to ICT. So one thing I noticed in myself, there is some different region of the market, like consolidation. So those are typically low resistance liquidity, meaning that if you see this portion, this is 1 hour chart, right? So in portion, if you can see this one here, that in fact the price is like in fact the price is all of the order block, like it could be a bearish, it could be a bullish order block. In fact, like, and there was no fair value gap here, there was no fair value gap here. You see, there is no fair value gap here. So all of those things are like kind of overlapping. You see this overlapping. So whenever it's overlap, everything is overlap, then I mean, this the whole portion become low resistance liquidity. And to become high resistance liquidity, so now you need to have a fair value gap to create a high resistance liquidity. For example, you can see, so you can see, for example, you can see it here. So you can see it here, you can see this is a fair value gap. When the price will cross this fair value gap, if close above this fair value gap, chances really high you will just go through it until this resistance. So this fair value gap essentially working as a resistance. So in ICT's concept, price sometimes, like this is a BC or CB you call it, so price sometimes goes from imbalance to another imbalance or order block. So imbalance and order block, these are the basically these are the main what do you call, I mean, order block means drawn liquidity, right? So it's imbalance and order block is the main destination or main objectives of the draw. So for example, if you see these regions, right? So now if you come back here, so in fact you're gonna see that often price actually like the whole consolidation zone. So now if you see this one, so price drop here and then it just kind of close below this first fair value gap. The next time when it will price go, it will go next to next fair value gap. There's the order block come fair value gap just right after that. You can see the price goes here and then goes down. So this is definitely crossing the order block. So yeah, just like, you know, close below this order block in fact. So that means this whole area become mitigated or become liquidity, right? So now when price pull back, that how far you will pull back? You will pull back until the next fair value gap or the imbalance. So this is the in ICT's definition, this is intermediate term high. So any price trying to reach or kind of fill up an imbalance is the intermediate price high, is basically 22 model. So now we'll go there. Now when the price become bearish again, I mean when the sell side delivery will start, then what is the destination? You know how, you know, because this portion has been mitigated until here, essentially until here it's been mitigated. So this is remaining, this is mitigated, and this is, I don't call it a very strong, because as long as this mitigated, it means to me, it means the whole point is actually now mitigated, right? So and then after this bearish movement, there's a strong imbalance here already kind of working as a resistance. Whenever price cross this, you'll probably just come somewhere here, and then you can see definitely price come until this area. In fact, when it crossed this, I mean whole zone of the order blocks, it create further fair value gap, even in fact creating more resistance basically. Now the question is like, okay, we can see that. So now the next zone is here, right? So does it come here? No. So how far it comes, the price actually, how far it comes? So it comes until here. So here, okay, yeah. So now you can see it is actually just touch at the order block, and continue. So this is the what we call CPI news data, but I mean this could be news driven, but I don't really plan to go here just before the CPI. So I don't really recommend to chase this whole thing, because it could be, you know, it could be just pumping in your head, and then this has been mitigated. So if it's CPI actually sells a delivery, then probably will just come until here, right? So now in fact the price actually look at that. So now where the price is delivered, so the price was delivered in the order block, not in the fair value gap, right? So now previously price was delivered in the fair value gap, now try to come here. So now for example, if you see this pullback, if pullback was delivered to the order block, but it didn't really go above or close above in 1 hour chart, I'll come back here. So now mainly let's keep the focus on the discussion. So what I want to say is just low resistance liquidity. So this is happened during the Asian session, and then when the breakup structure happened, so this is the breakup structure happened, and then kind of scanning the displacement, right? So this is the displacement, and then price will just follow, and then going back to this mini order block here, and then follow, targeting the initial objective. Now the same phenomena you have seen this here. How? See this portion, this is actually become liquidity. This is portion, look at price always try to go low resistance liquidity. So now this portion become liquidity. So now if you see this point, this is just a breakup structure, right? It breakup structure here actually, but it failed to take it, so it goes back until it swiped the liquidity, because there is an imbalance here previously. So price has objective, a reason to swipe it here. So and then the whole portion, if we go to 15-minute chart, right? 15-minute chart will tell you that this is essentially a low resistance liquidity, right? So you can see this portion this portion are low resistance liquidity, 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 and then this has been mitigated here. This has been just mitigated here, and then once it's been mitigated, and then price will just take all those liquidity, right? You will be just taking all those liquidity. Now scanning, this is a big displacement with a breaker, and then this was a breaker already. So this was a breaker already. So this is a big displacement. It is rescan the displacement, create a fair value gap, and then respecting this portion, and then just drop until where? You also know the destination. If it is drop, you will drop at least until here, right? You can see that there was very tiny, like this is a breach leaf fair value gap. It's been already been developed, so it just come directly at this order block and then stop it here. So now if you see here, right, you can see there's a strong BC here, buy side imbalance, sell side inefficiency. So that means that there is a one more candle we can expect to be from the one more down close candle we are expecting side by side here. So this side by side here, you will not definitely come here, but it could be somewhere something like a far, or it could be just leave as empty as it is. So it doesn't really matter. So but you know the destination. So previously price come back to the order block. It did not really deliver in the fair value gap, so it come to the order block. Why? Because you can see there is a order block here. It also delivered in the order block. It also delivered in the order block. So now you will go back. So what I was looking for it, I will try to look whether it will, if the price create a fair value gap here. So I don't think so this fair value gap will be just so big like that. So the price will need to be traded here and then sweep the liquidity, and then there will be nice selling opportunity to targeting these order block. Yeah, so you can see just price just mitigated. So when price next time come down, if there is no liquidity or no fair value gap, and then you're gonna see next week if the price is really a, as mitigated order block all the way, and then swipe the liquidity until this here, and then or until here, then there will be good chance to target this to fill up this BC or this order block, essentially something here. So this is the portion. So anyway guys, so this is what I was going to say about the liquidity. You can see this kind of low resistance liquidity everywhere. For example, I really love some of the index. I was following Hang Seng Index. It's a HK50 in weekly chart, and everywhere you can see that. So weekly chart, you can see this is what happening here. So now you can see when last year price goes up, and then you take it here, right? Yeah, it just close above this one. So next target is somewhere here, right? Somewhere here. So now you can see this all everything are essentially, these are just mitigated, right? So this is gonna be really a big move up there. So this is just a mitigated liquidity, very low resistance liquidity. So price will, whenever I'm expecting price to be at least coming to the 50% of this order block. So price just come here. I'll see in next week we get a chance here, and then probably until here, that's a kind of free run for the price. Okay, so this is a weekly chart. Can be happen very slowly, but in my understanding, usually time is stretching. What I'm referring to time is stretching is that same time it goes very quickly when it's come back very slowly, and then price more tends to deliver in different order block, like responding in the order block. Like first time it come to kind of make the fair value gap efficient, and then pull back, and then grab the liquidity from here, and then fall down again until the order block. So it closes below the order block, so that means next order block is here. So they go up, taking the liquidity, and then fall back in. So in fact, this is the same phenomena I also noticed in gold earlier. So if you see this one, right? So if you see in gold, for example, when to see, this is gold weekly daily chart, I believe, like this April, right? This summer, right? This August. Yeah, look at this. So when during the summertime down there, after the gold was making a new high and then coming back, so when it fall down, so there is a fair value gap here, right? That the delivery target is to fair value gap, not to basically. So guys, we need to practice and then to keep observing what is the target. In fact, price just simply taking the equal high and then continue. So now what happened here, if you see this portion, these everything, so these the in daily chart for gold, this the whole area was the mitigated liquidity, right? So when price come here, purge a previous order block, or kind of traded inside the fair value gap, and then in fact very quickly you can see this portion is very powerful and very strong. Fair value gap is here, come back to mitigate the fair value gap and then swipe this liquidity. Once this portion was very low resistance liquidity, so and there is a gap, there's a resistance, that means the CB, the fair value gap, right? So in fact if you go below, so you get the same thing, that this is a very low resistance liquidity, so price will simply just drop it here, and then coming back to here, right here is that, and then price will simply when these fair value gaps are mitigated, so this portion are just consolidation, low resistance liquidity, again you'll just go down. So now you can see now there is a order block here, and then the price drop below this order block. So that means when the price comes, so next target is this order block, right? So now we're gonna wait and see, so that where the price actually retrace. So retracement, you can always go to your fib, you know, see equilibrium or cross or not, but I mean you can just easily by eyeballing you can easily understand what is going. This is it's pretty good an optimum trading tree for if you know about optimum trading tree. So it close above, retrace until this daily chart, and it's just optimum trading tree. And then again, so if you see this one, like this area, and then come back this bit hold resistance. So now yeah, as we are talking earlier, so we have it here, then we have it here, so this portion has been taking. So remember what was the next target was here, pull back until this order block, simply just a beautiful order block, right? So there was just a nice order block here, right? You can see this portion was order block, just respecting the order block, and go pull back again, further respecting the order block, right? And then yeah, kind of sweep the liquidity in the order block, and then this is inversion fair value gap, and then goes down to like taking all the delivery, the target. So this is a kind of month when May until October, so this is about like, you know, couple of months movement, the delivery. So price actually was planning to deliver sell side. So now if you can really see what I mean by time stretching and then time squeezing, right? So you can see this portion from here to here, how long it takes. It takes only like 28th February until May, so February, March, April, 2 months. So now to recover or to kind of deliver in the same price, that took about like from where May until October, so it's about 5 months, 5 to 6 months, right? So now it was only 2 months and 6 months, it's almost 3 times, you know. Usually it's like, in my observation, it's almost 3 times. So now in fact you see the triangle, you see the time stretching. So these are the time squeezing, like squeeze the time and kind of aggressively move, whole thing moving slowly here, right? So now what gonna do price next, right? So we do identify some of the low resistance, because these portions are mitigated, these portions are mitigated, these portions are also mitigated. I mean these are like the whole entire area are mitigated, become low resistance. So you can see how many days were here, it's like month, almost a month. And then in daily chart, gold just crossed everything within just a week, because these portions were whole, I mean very low resistance liquidity. It's a very low resistance liquidity. So now look at this. So there is a kind of months of the ranges gold just cover here. So now coming back here, so now you can see this one, same thing, price are overlapping, bridging each other. So come back to the order block, right? So respecting the order block. So now this fair value gap has been taken, so next one is until here the price actually goes. So now do you see any low resistance liquidity here? I don't really see it, right? I don't see any low resistance, because there's a fair value gap here, there's a fair value gap here. These are kind of creating strong resistance, not a low resistance. So now what to do for price, right? Now you can see these portions are low resistance, so gold come until here, and then when it comes here you can go to 54-hour chart to see that. So this is the CPI news. I don't really follow news, so I don't mind, but I'm expecting, because these portions are still very very low resistance liquidity to me until here at least, and then price close at the order block. Okay, yeah, so probably when the price goes down, probably will come until here, because there's a fair value gap here, right? Is it the fair value gap respected? Yes, respected. There's no fair value gap until here, so again you need to sweep and then goes down there. I believe the price will come until here within a week or so, by December contract, by December. I believe by December delivery, so it will be delivered by December, because every time price come in order block and respect, so the next order block, I think, to me, is here, or here, very unlikely, so because the demand of gold may be high in the season. Yeah, so coming up, so yeah, something like here, right? Yeah, actually, in fact, I'm targeting to, I'm looking for price delivery in this fair value gap. Okay, but there is a strong fair value gap here, so we also need to see whether what happened to this fair value gap, what happened to this basic. These are tricky, these are very tricky, critical, because you can the first one has been completely delivered, completely mitigated, completely redelivered, right? And then the next one will be this whole gap, so gold will probably just drop. Okay,